Welcome to the SpreadX Weekly Financial Markets Preview. Again, we're going to be looking at cable, and a very interesting week given the resignation of the Brexit Secretary David Davis and a number of things as well.
It's interesting, as I was coming into work, I was expecting the pound to be in sort of a pretty bad shape. However, it's taken the news not only well, but it's actually benefited from his exit. I think perhaps because it may be, if things pan out okay for Theresa May as the week goes on, I guess, and as Monday goes on, it could allow the soft Brexit that was sort of agreed at Chequers to be more easily put forward to the EU than if David Davis was still as Brexit Secretary and was sort of in opposition to that deal. Obviously, Dominic Raab has been brought in as the replacement now. I'm not quite sure how much he toes the line as David Davis. I think the pound has also been happy that a replacement has been found so swiftly. I don't think the government necessarily had a choice, so it might have been a bit of a chaotic appointment, but the fact that someone has been found already has also helped the pound sort of extend its gains, especially against the dollar, where I think it's now at 3.5-week highs, and sort of continued its stuttering but steady gains that it's seen in the last week or two. I think, that is going to be, I was going to say it's going to be the dominant thing for the pound in the rest of the week. It really depends how it goes. Like, it could be, if it's sort of sorted and things calm down by the end of Monday, by the end of Tuesday, then I think focus will broadly turn back to US and China, US, EU, and sort of a trade war. Obviously, again, dependent on whether both of those issues get any update. I think one of the reasons the pound has benefited, and sort of the markets broadly have benefited on Monday as well, has been because there hasn't been any further escalation on the trade war issues between the US and China last Friday. So obviously that is a permanent cloud hanging over the markets at the moment that can disrupt and would be bigger than Brexit in terms of being a market driver. In terms of other stuff, I guess, in terms of data, Tuesday sees the first GDP reading that is now on a monthly basis. They're sort of the UK, one of the first major countries to do away with now the quarterly readings. I think it's going to be monthly readings for the 3-month period for the 2 months before that month's reading. Right. So Tuesday's reading will cover the 3 months to the end of May, and I think investors will be looking for an improvement on the first quarter's 0.2% growth. Not great. I think recent PMIs have suggested that the growth could get back up to 0.4%, but that period does also cover the beast from the east in March. So it'll be interesting to see how the UK economy actually fared during that period. In terms of what our clients are doing, previously they have been sort of gradually buying at its lows. I think they're perhaps now starting to lose a bit of confidence in how fast the pound's been travelling in the last few days. And I think as it's crept towards 1.335, we've seen more and more sellers come in. I think because it's risen on sort of a flash event, it might not have the momentum to continue that if say there's US inflation figures on Thursday, if that's a decent figure, then that could disrupt the pound's gains and things like that. So investors slightly losing their confidence in the pound since it's now at near 1 month highs, selling around the 1.335 mark.
Okay. Great stuff. Thank you very much.